Hello, I'm Adrian Ashton, and welcome to this slightly different video in the series about understanding financial accounts and doing bits about financial management. Now, this is a bit unusual for a number of reasons. Number one, you've already noticed I've gone supersized. I'm not hiding in the corner of the screen as a little thumbnail icon. There are no PowerPoint slides within this to go through, because what we're going to be doing in this video series is a live or live-ish hands-on guided tour of the accounts of the Friends of Victoria Park Stretford. We're actually going to put into practice, or hopefully illustrate, some of the ideas and concepts that the previous sessions in this series have introduced you to. The idea of a balance sheet, an income and expenditure statement, how we actually start to look at these pages of numbers as they appear for real, and how we start to make sense of them. Now, we're recording this in the autumn winter of 2020, and that means that this video and the information in it will become dated quite quickly. So it may be worth your checking for a more recent set of accounts that the charity has, but using the approaches we're going to take here to help you approach them then, whenever you're watching this or engaging with it. So I'm going to minimize myself in a moment. So I'm going to actually share up some examples of the accounts. So Friends of Victoria Park Stretford is a registered charitable incorporated organization. As such, it makes an annual return to the Charity Commission every year. And part of that return is its accounts, its financial statements. Now then, if you've looked up a copy of the latest annual report, which at the time of recording this video is the annual report for the year 2019-2020, you will see within it something that looks like this: the accounts. And these are towards the back of the report. What I wanted to do was just kind of talk through what these mean, why they are as they are, and actually why in years to come they won't look like this at all. Why they're going to change. So firstly, some of you may be trustees elsewhere, or had experience of sitting on boards and looking at accounts that have been filed with the Charity Commission or Companies House, and you're looking at this and going, this doesn't look right. This isn't what I was expecting to see. This is like bookkeeping. This is the set of the transactions that have gone through in and out and what they've been for. And you're right. And that's because as a charity, the way that the Charity Commission determines how you should prepare and present your accounts changes depending how big you are as a charity. So as the Friends of Victoria Park Stretford becomes larger over time, it generates more income, undertakes more activity, it will need to transition and actually prepare and present its accounts in other formats, which we will introduce you to in this series, don't worry. What I want to do though is, like I say, just give you a snapshot of this and say, don't panic. If you're looking at this going, I don't really get this, it's okay. This is the format that the Charity Commission have told the charity, Friends of Victoria Park Stretford, because of your size, your turnover in the year 2019-2020, this is the format that we want you to prepare and present your accounts in. And it's almost like a summary management accounts format. And it goes through the key transactions that the charity's done over the year. So the date, whether it's money in or money out, what it was for. And then there's also the charity's introduced a kind of a loose color coding scheme as well. So it can more easily start to spot certain types of transaction. And it goes through and it gives us a running total of how we've gone over the year. Interestingly, it also starts to show that there are times when things maybe have gotten a bit tight. Times where the balance has gone into the red. The charity is technically overdrawn, but it's known there's money coming in later on, so that's okay. It's just worth bearing about in that mind. Now, interestingly as well, so it goes through this process. These were all the transactions during the year. This was the date. This was what it was. This was what it was about. Also, whether it's restricted income, of the charities called it protected here. But we've mentioned this in a previous series, if it's restricted income or unrestricted income. Is this an amount of money which can only be used for certain purposes, or can it be used in any way the charity deems appropriate? And then it gives the tally at the end. And also, in terms of what we might expect from a management accounts perspective, it also includes all of the transactions it's conducted at the end of the year, which haven't yet cleared through the bank. So it knows these are commitments that are going to be happening imminently. They've been committed to in this year. They just hadn't gone through the bank balances by the time the accounts were closed off. So that's a useful check and balance as well, to say, just because we think we've got this much money here, actually there's a balancing amount at the bottom to work out and think about. And then this also then goes into a loosely defined balance sheet. So it actually shows the balance of savings, the balance of reserves that the charity has. What did it start the year with in terms of free cash reserves and cash that was actually restricted? We've been given a grant, but we can only spend it on certain things which haven't yet happened, and then combine them over the end and top them up as we go along. It's also then broken down in terms of that protected income or restricted income, where that money has come from and what it's for. And then they've been signed off as being accepted and agreed by the trustees before they've been filed. So that's kind of like, okay, well, okay, I understand now why that's presented as it is, but there's still a lot to try and wade through there and to pull out. So what I've done for the purposes of this session is I've done a very rough, okay, and this is unaudited, it's unprepared, but a very rough walkthrough of taking all of those transactions, all of those references, and turning them into what might be a more traditionally recognized financial statement. You're welcome. So this shows us for the year that we have, 2019-2020. And let me first get my laser spotlight on again, then we can start to see what we're doing. And this starts to say, okay, let's start on this top left to begin with as a spreadsheet. Where was money coming in from? Well, we know over the year, money came in from donations. People gave money. People donated gifts. Okay, that's fine. And then there were events that we staged, Easter egg hunts, parties, discos. We also, in terms of gifts that we received this year and last year, there was a gift aid element. So people said, we're making a gift to you, a donation, and we are a taxpayer. So the charity was able to say, we can reclaim an additional amount in respect to the tax that has already been paid. And then there were grants that were applied for as well and received. So main types of income. And over time, those range of income types will be added to. There will be types of trading activity that generate income as well. The question is, how much over the year? So what we then start to do is we go across and say, okay, well, actually, the key things here, was it unrestricted? So that money that came in from donations, how much of that is spend it as we want? That is, okay, that's fine. We'll use it for this. We'll use it for that. We'll just stick it in the bank for a rainy day. And how much that donations was actually for a specific cause? Because if we've fundraised for a specific activity, then legally that's the only activity we can use that money for. It's restricted. Much in the same way that many grants that we receive are also restricted, because we've said to the grant making body, we would like a grant to buy a roof. And the grant making body goes, okay, here's your money to buy a roof. So you can only use that money to buy a roof with. You can't use it to buy tea bags or bird feeders. Okay, you can only use the grant for what it was given for. So it's restricted. So the way that accounts are usually started to be prepared in a charity formal traditional accounts format is this idea of how much over the year. Add them all up over the year. Unrestricted, spend it as we need. Restricted, have to use it for certain stuff. And that helps you as trustees work out, of this total income over the year, nearly £120,000 in, how much of that is actually free to play with as we want. That has actually been, that's a good way to generate income because it gives us more flexibility. And of that 118,000, only about 10% is free to spend as you need. Okay, the rest of it's restricted. Now, given where the charity is at the time of recording this session, which is it's building itself up, it's finishing a building, it's getting things in place, that's probably okay because it's planned for that approach. In the future as trustees, if you're looking at financial statements like this, ideally, you'd like that unrestricted amount to be higher, to be a higher proportion, because it means the charity has more flexibility about what it does and how it uses it. Okay, so that's income coming in so far. Then we go down the table a little bit. I would start to say expenditure. What's the charity spent the money on? We break it down that way. Again, usual kind of headings. We did some events, there were some bank charges. We're developing the site that we're on at the moment, that the charity is creating a building, landscaping, things like that. There's some subscription fees as well that we're going for, publicity costs, and we just kind of add those in over the year. And those costs are either assigned to a particular funded project or were directly linked to what fundraising amount was raised for, or actually they weren't really detailed in there, so we can just put them under unrestricted. And that starts to give us a tally. So, well, again, overall, the charity has had about £120,000 in. Overall, in the year, it's spent just over about half of that, about £65,000. So overall, the balance at the end of the year is about £50,000 up. Sounds good. But how much of that £50,000 is actually restricted? How much of that is you've got your hands tied because that's money which has been committed to being spent next year, say? And actually, most of that balance is the restricted amount. So though it seems initially £120,000 in, £60,000 out, this is great, charity's done really well. Actually, there are other considerations, and it's that distinction between restricted and unrestricted that helps you as trustees get a better idea of what's the financial position going on here. Okay, that's the income and expenditure statement. It gives us a snapshot. Where's money come in? How have we been spending it? Great. What we also need to do, though, is create a balance sheet. And the balance sheet is a story. Remember, it's a story of where we are and how we got here and what the future prospect is like. So again, so I've taken this information and created a very loose, rough summary working balance sheet for the Friends of Victoria Park Stretford based on that information in its annual report as best I can. And what this balance sheet's worked out, again, restricted and unrestricted. So there are assets and costs which the charity are committed to or have complete flexibility over. And the balance sheet works is, well, what are our assets at the moment? What things do we have that have value? And at the moment, that's all pretty much the money in the bank balances. Okay? Because what the charity's been spending and gaining over that year doesn't really have any helicopters yet to show for it. Doesn't have any speedboats, doesn't have huge amounts of intellectual property registered either. Its main thing is the cash in the bank. And most of that is restricted because of the grants that have come in, and it's been given to build the new centre, create the new building, landscape the park. It's restricted. Now, against that, we also say, well, actually, what have we got to worry about? As we go into next year, how much of that money is already committed? So the income and expenditure statement showed us what's the balance at the end of the year. Are we up or down? The balance sheet actually shows us what state are we in going forwards, what's already been committed by the charity before we even get into spending and deciding about what type of tea bags we should have or how many paper clips we should be buying. So those creditors, the people that the charity knows it will have to make payments to. And creditors either come as a short term, within 1 year, or longer term, more than 1 year. So at the moment, we know that that restricted balance of cash is all because of money, because of activity that it will be committing to doing over the next year or so. So it kind of balances out. So it's got the money, but it can't really rely on it for anything longer term because it's already committed. Similarly, with the unrestricted balance, there are bills and things that it said, okay, we're going to make these commitments. We've got these bills that have come in. We just haven't actually processed them yet. And that's committed. So actually, at the end of the bottom line figure, the total charity funds is about £5,000. So this is the amount of money that you as trustees, when you sit there, look at the accounts, go, that's the figure that helps us understand how much flexibility do we have to adapt, to respond, to do new things with? We've got a lot of money in the bank already, but actually most of that's already tied up and committed. We can't touch that. We shouldn't be touching that. What we know is £5,000. That's the position we enter the next year with in terms of understanding our flexibility. So hopefully that kind of makes a bit of sense. So we've gone through the process of saying, how does the charity's annual report and accounts currently look, which can be a bit confusing, but it's a reflection of the size of the charity in that year. And how might those figures actually be transposed or extrapolated or reinterpreted into a format which is a bit more traditional and helps you as trustees get that quicker picture and understanding. But that's been a bit hypothetical. So what I also wanted to do in this session is give you another worked example, another one. So let's go back to the accounts from the charity as they were. And I want to show you alongside these another set of charity accounts for a similar period. Okay, now this is a charity. If you go into the Charity Commission website, you can look up any charity and you can find their filed accounts. And Safe Regeneration here is a charity that's over in Merseyside, so still in the Northwest. It's also a charity that's interested in supporting taking a whole community approach, and it's doing that through acquiring and developing tracts of land alongside canals and on old industrial estates to create new buildings and facilities to create community benefit with. That sounds a bit familiar, which is why I thought it might be a good fit as a worked example. So in the future, this is how accounts might start to look. So again, just as a worked example of what one might look like in the future as a work through. The accounts are made up. This is fine. We see it coming in. So there's lots of standard formatting here. Heading, kind of contact details. Tracy, this is how the charity is set up. This is what it's about. This is what it's been doing over the year. Now, this is an important one, because what this starts to show here is this is part of the trustee annual report. So we mentioned this under the governance series of videos in this wider session, these sessions and programs, that say actually, as the trustees, what benefit, what good stuff has the charity done over the year? And this forms part of the annual reporting and accounts. But let's get into it. So this is now where we start to see the interesting stuff, and as it goes here. Now it's a bit small on the screen, so we'll enlarge it a little bit, just so we can start to make more sense of it. So again, this shows us unrestricted funds, restricted funds, and total funds. So this again, that sounds just like the spreadsheet Adrian showed us. Exactly the same type of format and approach, which is where did the charity receive income from in the year, and how much of that was free to spend as it needs, and how much of it was for specific projects and activities, and how much did the charity spend. Now, in traditional formatted accounts like this, these are summarized. They're not broken down in the way that I've broken them down in that spreadsheet. So it gives you a much quicker snapshot picture as well. So we start to see, well, actually, how's the money gone? So it gives us total funds for the year. And interestingly, over time, as the charity produces more accounts each year, it also shows the previous year for comparison. And that previous year is a really important benchmark because it helps us make better sense of how well have we done this year. So, for example, just having a quick look at these accounts now, and I've mentioned at the start, we'll do it live-ish, because actually when I was getting these accounts downloaded and ready, I didn't look at them. I haven't prepared any clever formula and sums. I'm looking at them now in exactly the same way as you are looking at these as you're watching this video, whenever that happens. That's a bit spooky. So let's kind of see what kind of story that we pick out. So most of the charity, so in the year, most of it's been restricted income coming in. And from what I know of the charity, and if we read the rest of the report, that kind of makes sense because they're still in this development stage. The site's there, the building work started, but any money coming in is all going to be tied in to creating and finishing off the site. So you'd expect it to be restricted. Okay, that's fine. And then most of the expenditure has been around that as well. That kind of makes sense as well. Brilliant. But how does this kind of, how do we get a sense of is this good or is this bad? So we can look at the previous year. So 2018 to 2019. So in 2018, the charity generated nearly £900,000 of income. This year, it's only generated a third of an income, about 300. So it's dropped 2/3. The income's really dropped off quite quickly. Now, from what we know from reading the trustee report above, that might make sense because in the previous years, they were getting a lot of income to help them acquire the site and start the initial building work. So that kind of makes sense. So we'd expect it to drop off a bit. So, okay, not too bothered. But then against that, so income's fallen by 2/3. But when we look at how the money's been spent, that hasn't dropped by 2/3. In fact, the income hasn't even dropped by half. So there's something there about how the charity is spending money. So at the moment, it's actually spending up above its means in that year. So we can see that. So the kind of net expenditure. So it's spent out more than it's brought in. And that kind of raises a question for you as trustees to say, did we expect this? Did we plan to be running at a loss? And you'll only know that because you'd have set a budget at the start of the year that said, we expect this year that the charity will make a loss on paper. But that's okay because we had a load of money in the previous year that we're using for the costs this year. But it's that check and balance point, that sense check that makes you go, is this okay? Should we be worried as trustees? Okay, this is kind of the bits of the accounts we pull out. Ultimately, though, we kind of say, well, what's the total funds that we're carrying forward at the end of this financial period? So at the end of last year, the charity had £250,000 it was carrying forward. And again, a lot of that was restricted to develop the site. So actually, we would expect that we would have used up more of that in this year. So we've made a loss. The charity's lost £80,000 this year in terms of activity, but it's actually okay because it's done some clever balancing between things, and it still actually ended the year up better than you'd expect it to. So it's still got about £225,000 going forward. So it's got a good amount of financial capital there to keep it going, to keep playing forward that expected spend as we go and work it through. And then we can look at other aspects of these accounts, which are the balance sheet. So on the balance sheet says, okay, well, this year versus last year. Now, when I created the spreadsheet for you a few minutes ago, I broke them out as to restricted and unrestricted, just to try and illustrate and highlight some of those nuances in accounts. As we prepare it here, they're just grouped together. Okay? Assets in terms of the formal accounts are all in together. But when you're getting reports as trustees, the management accounts, you may want to ask for this to be split out, and that's fine if you do. This shows us that over the year, the assets, the things of value that this charity has in terms of fixed assets, the land, the buildings, have remained pretty constant. It's done well. So it's starting to invest in things that maintain their worth, which gives the charity more surety and certainty over its long-term future. They have current assets, so fixed assets are things which are worth money but can't easily be turned into cash. Current assets are the cash or things that can become cash quite easily. And what this shows, actually, this is where the hits happen, the big changes happened. There isn't so much ready cash as there was this time last year. And then similarly, where we kind of also then take account of unpaid bills, those bills that we know are coming up in the coming year that haven't yet cleared into the bank yet. That's also going up a bit as well. So we've got this idea, we're building this picture that last year, the charity received a load of money to develop the site, develop the buildings, get things ready, but it's taking a couple of years to work it forward. So it's always potentially going to be in this position where we expect the accounts to show a worsening position, apparently, but it's been planned for because it's been budgeted for. So financial management, understanding accounts, isn't just looking at the account sheet like this, it's having that budget part at the start of the year to go with it as well. It's knowing the questions to ask. And this is the idea of these sessions, to help you think about how do we draw those out? Where do we spot them? What are the prompts? So overall, as we kind of work through this example of the this set of accounts for this charity, what this shows us is the net assets, the net value of this charity has fallen over the year as well. Because it's spending some of that money that it's got stacked up. Because it's committing to more activity as things gear up to be developed further. And ultimately what this kind of says is a bottom line figure, the funds of the charity, what's restricted and what's unrestricted, is we start to see that, yeah, so the charity's still got about 225, £250,000 as total funds. So there's no immediate sense for panic in terms of things disappearing quickly. The question though becomes, as trustees, how much of that is easy to use if something happens, if something unexpected goes bump? How quickly could we respond to that? Or do we need to go out and try and raise some more grants or do some more fundraising? So from a strategic perspective, how much wriggle room do you have? And what this shows is about 10% of that unrestricted funds is your wriggle room. So the majority of that money, nearly £200,000, is restricted. Okay, so those grants that have been received, that can only be used for certain things. Anything that's unplanned, anything that's new or unexpected, this charity has about £30,000 buffer to do things with. That gives it a nice bit of breathing room. So from that perspective, this is a pretty healthy set of accounts. The story of the numbers matches up with what we saw in the narrative from the trustee report above, and we can start to see where's that wriggle room. So which parts of the accounts do we look at to help us as trustees make decisions? Inevitably over time, as you look at more sets of accounts, you will hopefully become more confident in how you read them. You'll also ask more questions, and that means the accounts will be prepared in ways that preempt those questions, that have the information in them that help you better understand them first time around. It's a bit like riding a bicycle though, ultimately. When we were kids, we always thought we could ride a bike and it would be easy, and then we had our big wobbles to start with, but then the more we rode the bicycle, the better we got. And then we got bigger bicycles, we've got bicycles with gears, with panniers, they got more whistles and bells on them, literally. And that meant we got used to how we re-rode the bicycle because things were changing. And it's the same with accounts. As the charity gets bigger, the way that it prepares its accounts will change. There'll be a few more whistles and bells. And the idea of what I wanted to do, and we wanted to do in this session, was just to give you an overview of how the charity, Friends of Victoria Park Stretford, is currently preparing its accounts, how we can make maybe try and make a bit more sense of that and cut through it to read them and pull out the points, and then what they might start to look like in the future. So we got a sense of the bits we focus on at that point when it comes in. So hopefully there's been something in there that gives you some encouragement, some reassurance. There's been something that's made you pause and think and go, okay, right, I understand that a bit better now. So I now know what to ask next. And I was positive that actually questions are more important than answers. Always ask questions. If you don't understand the accounts or the information, ask for it to be explained in a different way. Accounts can be prepared and presented in chart form, not just as numbers on a page. So again, in terms of as the charity grows over time and it changes the way it prepares and presents accounts, don't be afraid to ask if there are different formats they can be put in to help you as trustees better engage with them, better understand them, so that you in your role with that strategic big picture overview can make better informed decisions. So I've been Adrian Ashton. Hopefully you're now a bit more comfortable and confident with how you approach reading the accounts of the Friends of Victoria Park Stretford. And thanks for listening.